Hi, I'm Ben and welcome to Motivation to Invest. Our mission is to motivate you to invest for your financial freedom. Whether that means escaping the 9-to-5 drudgery or just improving your quality of life, I'm here to help you by providing you with valuable investing tips and strategies. Due to the recent global issue, which shall not be named, the economy has stalled and the stock market has taken a major hammering. Is the world about to end? Or is this the greatest time to invest in some bargain stocks? If you believe, like me, that the economy will recover as it has done so many times before from previous recessions, then now could be a great time for you to start investing. You may have heard that cloud computing is the future, but what exactly is it and how do you take advantage of this growing trend as an investor? Well, the truth is, cloud computing is not just the future, it's the present. For instance, Google G Drive, Dropbox, and iCloud are all examples of cloud storage services. You may use these for work or just to back up your holiday photos. Cloud computing uses data centers to make computing power and data storage available to a large number of users over the internet. It also allows software as a service or SaaS to be truly scalable, with online games to online productivity softwares, from Google Docs to Microsoft Online. Cloud computing is also cheaper than traditional IT networks due to the economies of scale. Companies can outsource their IT and infrastructure, lowering their costs and in-house maintenance. The cloud computing industry is expected to grow by 12.5% per year. Some estimates even put it at 17.5% per year. This is incredible. Major cloud technology companies are investing billions of dollars per year into cloud research and development. For example, way back in 2011, Microsoft committed 90% of its R&D budget, that's $9.6 billion, to cloud computing. So how do you, as an investor, take advantage of this massive growth in cloud computing? One of the main challenges faced in the new age of cloud computing is that of cybersecurity. From data breaches to presidential election hacks, cybersecurity is a big issue. This is where Palo Alto Networks comes in. Based in Silicon Valley, California, this multinational cybersecurity company is at the cutting edge. With a previous 12 months revenue of over $3 billion, Palo Alto Networks is one of the largest companies in the segmented cybersecurity market. The company serves over 60,000 organizations in over 150 countries, including 85 of the Fortune 100. In 2018, Palo Alto Networks came in at 8th on the Forbes Digital 100. It's also got great management, with the former executive of Google, Nikesh Arora, joining as CEO. The cybersecurity industry was valued at $100 billion in 2017. This is predicted to rise to over $260 billion by 2025, growing at an approximate annual rate of 12%. Palo Alto Networks stock took a real hammering recently due to the global stock market crash. Is this stock doomed, or could this be a great opportunity for you to invest in the cybersecurity giant? In this video, we're going to find out. I'm going to deep dive into Palo Alto Networks business and give you a full stock analysis. Let's dive in.
Coming in, flex, I just wanna win.
Before we get started, go ahead, smash that like button and subscribe if you haven't already. Be sure to turn the notification bell on, that way you'll get notified when I release future videos and stock picks. It's good to be first on the scene when an interesting stock is at a great price. Palo Alto Networks' core products include advanced firewalls and cloud-based security services. Palo Alto Networks has ensured it's not being left behind in the cloud computing industry by making a series of acquisitions to complement its legacy portfolio with cloud-based security solutions. Palo Alto Networks' strategy to grow is to offer a comprehensive security portfolio for its customers, so they can benefit from a simple one-stop cybersecurity package rather than having to go to multiple vendors. As it grows, Palo Alto Networks plans to take advantage of the economies of scale by spreading its costs of sales, marketing and R&D over a wider revenue base. Thanks to its multiple acquisitions, Palo Alto Networks has been set for strong growth. Management also showed confidence in its 3-year plan to achieve 20% annual growth. That was before the global crisis, of course. Despite Palo Alto's revenue rising, its growth rate is slowing. This is due to a 9% year-over-year decline in its firewall revenue. Aurora stated on a Q2 earnings call that incentives were not properly aligned to drive greater firewall segment sales, and the company is addressing this by installing a new head of its firewall division and by adding new capabilities to the product line. Another factor which is decelerating growth rate is its hungry competition. Many cybersecurity companies are competing with Palo Alto, such as Checkpoint Software Technologies and CrowdStrike. Palo Alto's main approach to competition has just been to acquire them. They acquired a number of smaller cybersecurity companies over the last 2 years, the most recent being CloudGenix. Despite the acquisitions, the company ended the first half of 2020 with $436 million in free cash flow and $2 billion in cash. Palo Alto Networks is in a strong financial position. As a result, the company announced an accelerated share purchase of $1 billion to happen in the third quarter. This is of great benefit to investors. Palo Alto Networks is also home to Unit 42, a leading threat intelligence team. Unit 42 is a group of cybersecurity researchers and industry experts who use data collected by the company's security platform to discover new cyber threats, such as new forms of malware and malicious actors operating across the world. Overall, Palo Alto Networks achieved a 27.5% revenue increase to $2.9 billion. Its stock rose to a 52-week high of $251 on February the 19th. That was just before the pandemic hit. Despite Palo Alto Networks' decelerating growth, it does have a strong balance sheet, which allows it to complete many acquisitions. One of the great investors, Peter Lynch, always says that you should look for businesses with recurring revenues. Palo Alto Networks is one of those businesses, with its suite of cybersecurity products offering a software as a service solution on a recurring revenue basis. In addition, its highly rated CEO wants to deliver benefits to shareholders such as share repurchase. On balance, I would say Palo Alto Networks is a great company to invest in. So I did purchase shares in this business to give me some exposure to the cybersecurity industry. I would love to know your thoughts on the cybersecurity industry as a whole, and if you like Palo Alto Networks as a stock. Please do comment below. Be sure to check out my other videos where I analyse 5 stocks I purchased during the previous stock market crash, which has seen me up by £1,000 in just 7 days. Now, as a long-term investor, this increase doesn't really make a difference to me, but it's still nice to watch your portfolio grow over such a short period of time. This suggests a possible V-shaped recovery from this recession. I also have a video reviewing the free trading apps which make it really easy to get started investing. I've included a couple links below which will give you a free share when you sign up. But remember, on this channel we don't give financial advice. So please evaluate the stock yourself, research it yourself, assess your own investing goals and your own budget before investing into any stock we mention on this channel. And if you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex. I just wanna win.